We exist inside a carefully constructed illusion. Every day, we step into a cafe, tap a card or a phone against a glowing terminal, grab a coffee, and walk away believing the exchange is finished. We assume it was private. Money for coffee, end of story, forgotten by the system. We believe our spending habits are nobody's concern, that as long as we aren't buying explosives or paying assassins, the state has no interest in us. That belief belongs to the era of paper bills and loose change. It died the moment cash stopped being king. In the modern financial system, your coffee purchase does not disappear. It is logged, analyzed, time-stamped, categorized, geotagged, and stored indefinitely inside databases that federal agencies can access without knocking on a judge's door. You are not a free individual participating in a market anymore. You are a record inside the largest financial surveillance machine ever built. The title of this video is The Real Reason Governments Track Every Transaction. The official explanation is always the same: security. We're told that financial monitoring exists to stop terrorists, traffickers, and criminals. We're fed the line: if you have nothing to hide, you have nothing to fear. But history tells a very different story. Over time, the definition of criminal quietly expanded. The surveillance net stopped targeting kingpins and started catching everyone, intentionally. The system isn't designed to locate a needle in a haystack. It's designed to own the entire haystack. To understand how we arrived here, we need to rewind to the year financial privacy effectively ended, 1970. Before that point, banks served customers, not the state. Your financial activity was considered personal. That changed when Congress passed the Bank Secrecy Act. With one stroke of a pen, every bank in America was turned into an intelligence outpost for the Treasury Department. At the time, transactions over $10,000 were flagged. Back then, $10,000 meant real wealth. Multiple cars, property down payments, serious criminal money. But here's the trick. That threshold was never adjusted for inflation. Over 5 decades, the dollar lost its value while the law stayed frozen in time. Today, $10,000 is everyday money. It's payroll. It's renovation supplies. It's a used vehicle. By doing nothing, the government let inflation quietly lower the surveillance net until it rested squarely on the middle class. No new laws were required. Time did the dirty work. Now, retirees withdrawing savings are logged in the same system once used to track international drug lords. And that was just the beginning. The real weapon came next: structuring. This is a crime most people don't even know exists. Imagine you sell a boat for $12,000 in cash. You don't want attention, so you deposit $6,000 one day and $6,000 the next. The money is legal. The sale is legal. Taxes are paid. But you've just committed a felony. Why? Because you attempted to avoid surveillance. That's the crime. The government can seize your money and sentence you to prison, not because the funds were illegal, but because you tried to remain unseen. In this system, privacy itself is treated as suspicious behavior. After 9/11, this mindset exploded into overdrive. The Patriot Act introduced Know Your Customer rules. Every bank account, crypto exchange, payment app, all require identity verification, photo ID selfies, proof of address. We accept this as normal now, but historically, it's unprecedented. For thousands of years, money was a bearer instrument. If you held it, it was yours. No identity required. KYC transformed money into an identity tether. Your wealth became permission-based. If your ID is flagged, the money doesn't belong to you anymore. It simply stops functioning. This paved the way for the most powerful surveillance tool of all, the Suspicious Activity Report, or SAR. Unlike fixed thresholds, SARs are subjective. Bank employees are trained to flag anything that feels off. Too much cash, wire transfers abroad, buying supplies outside your usual pattern. Suspicious. Millions of SRs are filed every year, most against innocent people. And once one is filed, you'll never know. There's no appeal, no notification, just a silent risk score attached to your name. This creates a digital panopticon. You don't know when you're being watched, so you behave as if you always are. You self-censor your spending, you avoid cash withdrawals. You sanitize memos, you conform. The system isn't catching terrorists. Terrorists don't use banks. They use informal networks, crypto, and physical cash. The net catches the compliant, the taxpayer, the small business owner, the worker afraid of audits. And now the war on cash has begun. Cash is hated because it's peer-to-peer. No intermediary, no server, no log. It's the last form of financial freedom. That's why governments are eliminating large bills and restricting cash payments. Force people digital, and every dollar becomes visible. This ties directly into taxation. Governments are drowning in debt. They're hunting for revenue anywhere they can find it. That's why payment apps now report transactions as low as $600. Selling a couch, walking dogs, side hustles all tracked. This isn't enforcement, it's extraction. But surveillance alone isn't enough. The real danger is control. We've entered the era of debanking. Accounts closed, access revoked, businesses destroyed. Not by law, but by compliance pressure. This began quietly with Operation Choke Point, where banks were nudged to abandon industries the government disliked. No legislation, no votes. Just whispered threats of audits. That system never went away. It evolved into ESG scoring, social credit by another name. Banks now judge clients based on politics, opinions, and reputation. We saw the mask fall in Canada. During the trucker protests, accounts were frozen without court orders. Not just protesters, donors too. Ordinary citizens were locked out of their own money. It proved something terrifying. In a digital system, your economic existence can be switched off instantly. The Nigel Farage scandal confirmed it. A bank dossier didn't accuse him of crimes. It condemned his beliefs. His politics made him unbankable. This is the end goal of transaction tracking, profiling. Once labeled high risk, the system ejects you. In a cashless world, money becomes conditional. Existence becomes permission-based. But the current system is clumsy, too visible, too slow. So the next phase is being built, programmable money. Central bank digital currencies aren't just digital dollars. They're software, and software obeys commands. A CBDC removes banks as buffers. It gives the state direct control. Balances can be frozen, altered, or erased instantly. No warrants, no friction. And then comes programmability, money that expires, money limited by location, money restricted by behavior. Spend too slowly? Gone. Eat the wrong food? Declined? Travel too far? Blocked? This isn't theory. It's already being tested. They won't force it. They'll entice you. Free accounts. Instant stimulus universal basic income. Desperation will do the rest. This is why transactions are tracked. Not for safety, not for taxes. For control. So what can you do? Use cash while it exists. Resist convenience. Protect transactional privacy. Because the battle for freedom isn't fought with weapons anymore. It's fought in code. And once money itself obeys commands, resistance becomes impossible. If they can see everything you buy, they can control everything you do. The tracking was preparation, CBDCs or execution. And remember, history shows they don't always wait for new tech. Sometimes they just change the law and take what you own. In the next video, we expose the gold seizure of 1933 and the dormant powers that still exist today. Smash that like button, subscribe. I'll see you in the vault.